Hi everybody, Eddie here. Going to do a market update for 2026. Before we start, disclaimer, this is not financial advice. Everything we talk about in this video is for educational purposes only and only scenario basis. This is not financial advice. Please seek your own financial advisor. All right, so 2025 has been a fairly good year for stocks. As you can see, at the start of the year, we had the big drawdown, and then we had basically a V-shaped recovery in continuation to all-time highs. This year, if you take a look of this chart right here, if you zoom out a bit, so you see, each time we get into the upper range, we get a reversion back down to the lower range, upper range, and reversion back to the lower range, right? So this has been a chart ever since from the COVID lows. It's been bouncing nicely off that trend line, and right now we're in that upper range once again. So leading 2026, what I'm trying to expect is what will be the new theme, right? So we had to make some. Last year was basically a theme of Bitcoin for me and meg stocks and semiconductors because of the AI push. So this year I'm more looking towards precious metals, commodities, and maybe still AI and semiconductors, right? So we'll know a little bit later on as earnings start coming out to see how it goes. But there's in 2025 there's has been a lot of capex spending for AI, and they're not really getting return off the investment just yet. So it's still very early stages, and I think their capex spending is just ridiculous for the amount of revenue they're actually getting out of it. That could bite them a little bit later on. So we'll see how it goes as the years go by. But for 2026, my big focus is going to be on gold and silver trade, right? Mid last year, I started converting from Bitcoin into a little bit of gold and silver. And then towards late in the year, I started very heavy in gold and silver trades versus Bitcoin because Bitcoin was not moving last year towards the end of the year, especially those very bullish months, it actually corrected. When that happened, I got stopped on a lot of my positions and I lock in some profits early. So really, I'm not down on Bitcoin. I'm actually still very significantly up on Bitcoin. But once I realized that gold was going parabolic, and then did a lot of research towards the end of the year for all the reasons why gold and silver is going up. So that's basically why I've been focusing a lot on gold and silver because the narrative have changed significantly ever since I started digging deep into the trade. So there's a lot of things going on around the world right now. There's a lot of geopolitics tensions and there's the dollar debasement trade that's also in play. And just last year alone, gold went up 65% and silver went up about 150%. You don't see that very often. There's only very few times in history that this happened. So we could be entering into another super cycle like we did in the 1930s, the 70s, the 80s, where gold and silver went parabolic for multiple years. All right. So throughout history, when gold and silver moves like this, usually indicate something big is happening in the background, right? And people starting to lose trust in fiat currencies. So both the metal's been benefited from central bank buying. So that's why gold's going up like crazy. It's a lot of central banks buying, right? And usually the paper market is what's holding the price of silver and gold down. But because out east, everybody's requesting deliveries now. And there's not enough gold and silver in the exchanges like COMEX and in the London Exchange because those are mostly paper markets. And over the past years, people don't usually request delivery on their trades, but ever since last couple of years, they start requesting delivery, and now we're accelerating those delivery requests. So it's creating basically a short squeeze on particularly silver because there's not enough of it. There's a massive industrial shortage. China just freeze output on silver and requires special licensing in order to export silver. So it's creating the squeeze even bigger. So I think this year will be a continuation of 2025, right? It's going to be the same theme. Potentially for gold to hit $5,000, $6,000. 5,000 is just around the corner, so 6,000 would be a target. In silver, you're looking at over $100 US, potentially going to upwards of 150 to 200 US. Maybe not 200 US this year, but we'll be hitting 200 US within the next 5 years, right? So with these prices of gold and silver, there's a lot. If you want a little bit more leverage, you can go into the miners because majority of the gold miners costs their base cost is $1,200 to 1,300 US for gold, right? And we're trading at around 4,500 dollars right now. So they're basically printing money at this point, right? And if we go to 5 or 6,000, there'll be the price of the stock will have to capture to the price of the bullion itself, right? So last year, miners have already 3x, some of them even 8x to 10x on the smaller miners. But the funny thing is, the valuation is actually cheaper today than it was before the move, before the 3x move, mostly because gold and silver has gone up significantly higher over the year, and now their margins are significantly higher and their earnings are significantly higher. And I'm thinking the next earnings report from these companies just going to drive the stock go crazy, right? And the biggest expense for a lot of these miners are energy, and energy prices are staying down. It's below $60 a barrel. That means that they don't have a lot of their biggest expense is right now is holding it's staying down, so their margins are getting fat, right? So I think the next few earnings reports just going to be very significant for these type of companies, right? And for silver, the base cost is $20 to $25 to produce, and it's trading at $80 right now. And if we hit, let's say, $120 to $150 on a squeeze, these companies just going the valuation is just going to be ridiculous. And it's going to be super cheap. So it's still a really good time to get into them right now. I've been actually hoping that there will be a correction in gold and silver, and it just haven't come. Maybe we'll get it later in the year, but so far it's just holding really, really well. I'll show you some of those charts a little bit later on, but that's basically my main theme for 2026 is this gold and silver trade on dollar debasement and of course the short squeeze on silver. Um, Silver is basically going to replace my Bitcoin position. I do expect that Bitcoin to do quite well this year as well. Probably more towards the end of the year as money supplies start coming online more rapidly. The Fed has stopped QT, quantitative tightening, and started QE silently in the background to the repo market. So if they expand QE, that means there's a lot more money supply coming online. And potentially, I was expecting actually a severe bear market or even a recession in the next couple of years. But if they start expand their money supply and as more money comes online, it tends to go into assets. So that recession may delay, but I still think we're going to get correction before we even have a continuation. So if they are able to manage um, the market from going into a recession, likely we're going to have another few year run, right? But if they don't manage it properly, we could still get that recession, right? Because valuations right now is very expensive in the markets, especially in a lot of the high tech stuff. And but it's very concentrated market as well. So majority of capital flow is into the make stocks, right? I think right now the make stocks is about 30 some 40% of the entire index of S&P 500, and that's pretty ridiculous in comparison to the tech bubble. I think that was only 20 some percent, so we're significantly higher concentration now than we did in the tech bubble. So if the tech bubble bursts, if the AI bubble bursts, it's going to be a pretty severe drawdown for majority of the market. So you still want to be very careful because we are in late cycle. So in late cycle, a lot of things can happen, and it can happen really, really fast, right? Especially now where there's a lot of geopolitics tension and stuff like that. Anything can happen. Like somebody could just shoot out a missile, and then that would be it, right? So I still be very careful. That also enforces the theme of holding gold and silver would be the best way to go. And I'll talk about how you can trade gold and silver a little bit later on. So for right now, for SPX, what I'm expecting is we're going to have a little run up early in the year, and then towards more middle of the year, I think we're going to get our correction, and then more towards the end of the year, we should get towards the election time because it is a midterm year, and midterm years usually pretty volatile, right? So if we do get a correction, I'm looking at 10 to 20%, maybe more if it comes all the way down to the bottom of the channel. But I do expect we will get a fast recovery as well going back towards the end of the year. So if we do come down, I'm looking at a scenario somewhat like this, go up something I hear, maybe retest this, and then it can't make a new high, and then it's going to start coming down. Maybe test to 200 and then break, and then maybe we'll start seeing this towards the end of the year again, right? We could go up as far as 8,000 on this type of move. That is the extended target of the previous wave right here from 2023 bottom, from the 2022 bottom up towards the peak on 2025. So you pull that down on that, and you get the expected moves to be around 7,300 as the first extended move. We're already hitting target at 6,800, which is a 100% extension, and then we can go as far as 8,000 extension. So if this plays out to be somewhat like this, around election time, look for that big volume candle like we are right here, right? Look for these big volume candles to get into the trade. We do get that correction. If we don't get that correction, I don't think we'll go parabolic, but we can do something like this, right? And then maybe towards the end of the year like that. Right, we can do it like that too. So, really depends how earnings go, and how if there's any type of news that will affect the market's movement. And with Trump in office right now, it's really just a wild card. So you don't know what he's gonna do next, and things are getting heated up quite a bit. So another, like I said, precious metals is the way to go. And if inflation goes up any higher, a lot of the other commodities trades will start working as well. Copper's already making all-time highs, so it usually goes from gold to silver to copper, and then maybe to energy. Um, in base metals. That could be the theme as for 2026. I'm thinking it's basically a year transition, and I'm basically kind of turning away from these higher risk trades into more precision trades, into something of more value, like hard assets that also potentially could be huge plays. Like silver's been just going nuts. So silver's been one of the best trades of this year. And I'm thinking for 2026 would be a great year as well. Okay, so let's take a look at charts. So like I said, for SPX, I'm looking at something like this. So your first line of support is basically this 6,500 area right here. Once that 6,500 area is lost, You can expect it'll try 200, which is at around 6,300. It could work its way up to 6,500, depending how far the market goes up before the corrective wave. And then if it does come down any further down, you're looking at around, 5,700. And this 5,500 is significant. So this 5,500, if we break through that, that means we broke through this channel. And then you can expect if we're going to get a bear market, that's where it's going to start. 5,500 break, maybe a retest, and then kaboom, like drop off the cliff. So this would be this low of the channel is going to be your key support for this cycle. So when this cycle ends, this channel breaks. So I don't know when that'll happen. I just know it will happen because that's how the market works. Whenever market goes too far out of line, you always revert back to the mean, right? So at some point in time, it's going to come back. It's going to break this. It could be late this year, could be early next year, could be 2030, right? So we'll see how it happens because right now everything's aligned that we're still bullish. Mostly because we started the year with a new all-time high. As you can see, we closed right at the highs there, so that's a new all-time high. Um, the first week actually is pretty significant. It kind of lines up what happens towards the end of the year as well for a lot of years. So I do want to keep an eye on this because we're at the upper part of the channel right here. So if you can't hit this 7,200, if you can't break through 7,000, you can expect to start pulling back. And like I said, that you want to start working your way down on the supports right here. So basically you have the 65 and then you have the 63. 6,000 obviously, and then you work your way down to the bottom part of the channel, right? So those are basically going to be your supports for this year. And then the trigger for me, if things do break down, we're going to get our correction. It's very likely that we're going to revert back to 200 and then break 200 if it does. And because we broke 200 last year and we break 200 again this year, that basically tells me that we're kind of towards the later part of the cycle and it's going to break down at any time, right? So that gives me a fair warning. And so that's why this year I'm really focused on, not really high value, high flying tech stocks. I still going to trade them, but probably a much lower size and be in and out more likely versus buying and holding for its full swing. Um, but I will for precious metals, right? Okay, so let's take a look at Bitcoin first. All right, so Bitcoin, so last year I did a projection on Bitcoin that we will hit 125,000 before a corrective move, but I did expand on that because we hit that target way too early, and then what happened was it looked like it was by design that it was set up as a trap because basically with BlackRock and institution money going into this Bitcoin trade that there was going to be a lot of traps. So that was one of the traps there. So if you look at this, so that's the channel, and this is the megaphone going up into the channel. Um, and there was this megaphone of a move right here. And basically, we're just at the lower part of the megaphone. We kind of broke through the megaphone a little bit. It is trying to get back into place. So Bitcoin does have a lot of traps. Now, this is a very important area. So far, this looks super bearish, right? So if this is super bearish chart, the the theme on this is we're going to basically create a lower high, and then we're going to break down. And this will form somewhat of a head and shoulders. You can see shoulder, head, shoulder. And then it's going to break this neckline, and then it's going to come down to support around 45 to 50,000, this area right here. So this is your main support because this is the basically the peak of the last cycle. And usually when it hits the peak of the last cycle, it tends to revert back up. So that could be the bottom of this cycle. And then if that happens, say early in the year or mid next year, you can expect a V up from there, right? Towards the end of the year. Uh, and Bitcoins is basically a liquidity trade. It's if there's a lot of money printing, Bitcoin goes up. If there's not a lot of liquidity, so like the Japanese carry trade kind of affected that last year, then Bitcoin tends to roll over, right? So for next year, hopefully, if there's a lot of M2 coming online, we're gonna have uh, the dip and then the V up, right? That's if we dip. So right here, it's looking like it's holding, but it's forming somewhat like a bear flag. So you can see right here, if you can't get above, say, 108,000, if you can't get above 106, 108,000, that zone, which is right here. So this is an important zone to look at. So if you can't get above that zone, it's going to form a bear flag. So you're going to basically going to get hit here, and then you're going to get your leg down, right? Uh, if it hits here and it forms a higher low and then retry, it's just going to be a continuation, right? In a cycle, that 4 year cycle, a lot of people still talking about the 4 year cycle. I think that 4 year cycle might be finished, mostly because dynamics of the trade has changed. You got institutional money come online now, and the instrument itself starting to mature because as institution money goes in, well, their clients don't really want 80 or 90% drawdowns in Bitcoin. So the drawdown levels are going to be lower, but also you can expect that the instrument's going to mature so that you don't also get those huge, gigantic 10x gains anymore, right? So as the instrument matures and as more capital and the market cap expands, that range or profit starts to shrink, right? So your drawdown's going to be lower, your also your profit's going to be lower as well. So it makes it as more of a mature instrument instead of a risk asset. So if you held Bitcoin for a long time, I would still wait it out. I still aim for 1 million on Bitcoin before I full exit to never touch it again. Probably, maybe. My goal is if he hits 1 million, I'm gonna take all that, convert it to gold. That's because gold has a 5,000 year history. Bitcoin, however, the guy who invented it is not there, and if you look deep into it, it's quite of a mystery how Bitcoin's formed, and it doesn't really matter. I trade it. I look at the charts and I'll trade the charts, right? So I don't really care about the history as long as there's money to be made, I'll be in it, right? So that's where I look at it. But if I want preservation of wealth, I probably go with something that's been proven to be preservation of wealth, which is gold and silver, right? And real estate. But I don't like real estate, so it's gold and silver for me. Anyway, yeah, so that's basically what I'm looking at for Bitcoin for this year is to see if we get the narrative of a bear and go, or we're going to get that continuation from here. If this is a continuation, my target for this is the first one's what 135, and then it's 150, and then it's around that 170, and the last target will be around that 200,000 up here. So if you expand on the megaphone, that's likely where it will land. And it really depends how long it takes for the cycle to get to the high. So if the cycle is towards like late in the year, towards 2027, you can expect it to hit 200,000 because you can see that here. Yeah, because this is the megaphone pattern. As the megaphone expands, so does the time. So if you hit the top of the pattern early in the year, it'll be a lower target, right? It'll be around that 150,000 if we hit that, say, by March, right? But if we say chop around and we end up going up towards the end of the year, you're looking at around 200,000, right? As a target because it's basically a math formula. And as the price expands over time, you had to incorporate that time part of the price action to get your targets because it's not really just a set target per se on something like this. Um, So yeah, basically I'm looking at those levels and depends where which part of the year we're gonna hit the upper part of the megaphone. That's gonna be where things are going. But nothing serious until it breaks through that I would say 108, around 108. It's 106, but like sometimes you overshot a little bit. So I use 106 to 108 zone. And then after that, you're looking at all-time highs at that 127-ish area. And once it gets above that, you can expect new all-time highs. And once it's above that, target is very likely to hit 150,000, right? So once you hit that 150,000, expect some type of reversion back down. So if it does go this route, you're looking at like hitting, and then you'll come back, retest this high, and then it's going to expand. And then you'll be hitting either at 170, revert, and then keep going and be trending like this and hit the 200,000 before maybe go back down like this. All right. So as price keep going up, you can Bitcoin tends to move in these very strong waves. So you'll be looking at that lower part of the megaphone as diversion down. Now, if the instrument matures, right, you can expect that we would never break the trend line for the next, you know, 10 years. So so let's see how this works out. If this works out as a continuation, then it's going to be a very strong case for Bitcoins for to keep going higher. And then basically all you're gonna do is just gonna hold, right? But if once this thing breaks right here, um, I already unloaded a lot of my Bitcoin, but I keep about 10% for long term. So if it does come down to like 50,000, what I'll do is I'll buy back the positions that I sold. And then I'm gonna hold on to it until we hit 200,000 or 150,000. So that would be the way I'm going to play this. So I always keep like the way I teach my students, you want to have a core position for your long-term stuff that you have high confidence in, right? So Bitcoin's one of them. So I'll have a core position. I only set a 10% allocation because it is still a risk trade, right? It's not a mature instrument just yet. And then I'll have a trade round position, meaning that position, depending how the market works, I'm going to add on to it. So sometimes I go up as 20%, 30%. At one point I went as high as 100%, right? Because that's how high the conviction has to be. You have to have really high confidence in that. And you also need to know how to manage it because when you have a very concentrated portfolio like I do sometimes, you have to watch it like all the time. All the time. Sometimes in the middle of the night because Bitcoin's 24 hours. If you don't want that type of stress, just don't go that type of size, right? So yeah, so Bitcoin, I'm still bullish on Bitcoin. It's just that short term, it's kind of looking a little bit weak. It's at the lower part of the channel, so I'm gonna see if he breaks this channel. If he breaks this channel, then I'm gonna look at this 40, 50,000. Once you hit that, it's gonna be up, like literally be up. So you want to be fast. Once it hits there, you want to go in, right? So that's where I would play it. And if it does hold and it breaks 108 and it holds 108, I would start adding again, probably gradually, not all in type of thing, because I still think that gold and silver is probably a higher probability trade for me. Even though the return for gold probably not as high. Silver, however, can be very high. So I'm in that trade. I'm committed to that trade right now. So that's the way it is. I made a shift because they always talk about Bitcoin as the digital gold, right? It's not yet at least, because if it's a digital gold, it will react to gold and silver, which it isn't. It's actually going the other way, right? So that tells me, it's not digital gold. It's still a risk asset. It's basically a tech stock, right? It's aligned with other tech stocks in price action wise. So it's trading as a tech stock. So just treat it as a tech stock, right? Once it matures and you start correlating with gold and silver, then maybe I'll call it digital gold, but it's not. It's supposed to, but it's not yet anyway. We'll see how it matures. That's why any of these new financial instruments, you always want to be a little bit more cautious, especially at its starting stages. I mean, it's a lot of opportunity there, but there's also a lot of risk. So you just have to find the right balance, right? Ether, same as Bitcoin. I mean, if Bitcoin's down, Ether's down, Bitcoin up, Ether up. So, you don't have to look at that. So I just follow it. All right. So that's for Canadian. So gold. Let's move on to gold. This is parabolic. Now I posted this trade last year. I had posted a little bit like before last year as well, but it just wasn't moving as it was last year. Last year, I think I posted right around. I used to trade gold all the time, and then I just stopped for a little while. I think start posting around right here when it start breaking above the all-time highs on the gold. Because that's also when I start buying physical gold as well. It's right around here. This instrument right here. Um, I'll teach you guys how to buy physical gold later on. The key is to have it vaulted and insured. And there's a lot of different ways to do that. So, and then I posted about this right here, the flags, because basically this entire way up is just flag after flag after flag. It's not, I don't want to fix it. After flag. So it's basically flag, 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 flag. And the thing is, it's not that far away from 200. I mean, it looks like it's quite far from 200, but 200 is rising as sharply as everything else, right? So it's actually quite strong. Now, if take you to the bigger scenario, and I'm gonna use the log chart just so you can see the difference. All right. Shit, it doesn't allow me to see historic. Yeah, kind of somewhat of it somewhat does. Okay, so right here, it doesn't allow me to show you the 30s. Huh. Anyway, I want to show you the 1930s chart. Probably should have did that before I did the video, but I could show you the 1970s chart, right? So 1970s is when Nixon took the US dollar off the gold standard because they couldn't pay their gold. Obviously, they ran out of gold when people start asking for their gold and converting their currency into gold. They ran out of gold, so they say we no longer convert to gold. And when that happens, we got the initial breakup. It went from, was it around $30 up to close to 200. Then he had a really severe correction, about 50 some percent. It's not that bad. But if you look at this, it went from $100 right there all the way up to almost $900 on that corrective move. Now, that's when stagflation happened. So the chart that we're looking at right now, which is this year, breaking out this cup and handle. So I did mention this cup and handle from before. So breaking up from this cup and handle, we're starting the expansion phase, right? So if this expansion phase happens to go parabolic like this, right? And this is off from the base of $1,500 base. So that was a 8x right there. So was 8x of 1,500 1,500 8x. You're looking at 12,000. And this cycle is slightly different because this cycle is going to be a currency debasement as well. So you're looking at possible running somewhere between 10 to 30,000, right? I posted a chart on my Facebook feed regarding what price point um, for um, for gold to be in order for US to revalue their gold to pay down their debt. And 30,000 is around that 20 to 30,000 is where the sweet spot is, where you'll revalue it just enough for it to have their debt to GDP under 100%, which is more sustainable, and then they can buy themselves some time to work it out, their books and stuff like that. But the deflex and stuff. But like if they want to wipe out their debt completely, it's not possible. It'll be that will require gold to be over 100,000, which is not very likely for it to happen. But 20 to 30,000 is very likable scenario within the next 10 years if there is a currency debasement. So they obviously right now they're throwing a lot of Hail Marys out there. And if it works out, then they might not need to revalue the gold. But so far, everybody's talking about this gold revaluation. And because central banks around the world is buying up all the gold, that tells me that something big is going to happen. And if central banks start buying gold, you should be start buying gold, right? And now the way, if you're in my Discord group, or I talk about this for basically 6 months now, and I've been posting, even posting my physical stuff to show people to get people motivated to go in. Um, so one thing to look at is obviously we're extended. I mean, you can look at RSI, we're in the 90s now. So I do expect there's some type of corrective move at some point, maybe after we hit 5,000, maybe right here, right now, but we'll see. I'm thinking it'll hit 5,000 first. Once you hit 5,000, there's a chance there's a corrective move, and that corrective move will be anywhere between 30 to 50% of the move, which can bring it back down. If I turn this back into a regular chart, I'm looking at around 3,000. So I'm basically looking around right here, this area right here. So I'm looking around between 3,000 and 3,700 is the corrective zone. So it'll be like somewhere right here. So if this does pull back, say we hit 5,000, we start pulling back. You see all my alerts right here. These are all buy alerts. I'm going to start buying my way down. As soon as we hit 4,000, I'm going to start buying my way down to 3,500. I'll gradually buy it. I won't buy it all at once. Um, so let's say it hits 5,000 right here. Let's pretend it does and see what's the corrective. So let's say it hits 5,000. So yeah, so 4,200 will be your 50% mark. 4,000 will be your 0.618. So 0.786 will be 7, and then 30 is the cool down. And if I pull that back down to all the way to the start of the breakout from the cup and handle right here, if I mark that down, then you're looking at that area closer to 3,500 as 50%, and then the 3,000 part, which is the low of that area right here is the 30 31 or so. So you're getting like a basic zone where to focus on the buys. Now the strategy for this is buy now, add to it, just dollar cost average it. If you're going to trade the paper market, the best way to do it is using options. Sell cash secure puts until you get it and you get paid along the way as well. So that's a good way to get a position if you're going to do the paper market. Now, what I highly suggest is do a physical buy as well as paper. So the way I do it is I use, like, I'm in Canada, so there's not a lot of options here. So in Canada, there's this I can use Kiko or PMX or what's it called? Silver Gold Bull. So those are my three choices. And I also got a local dealer that stores it for me. So you want to have your physical gold stored at third party that has insurance and it's allocated to you and you only, not the company, but to you, right? So allocated gold is really, really important. You want the gold to be under your name. So even if the company goes bankrupt, right? That gold is still yours and you can still claim it. You could request delivery on it. You could ship it anywhere in the world and it's discreet, right? So you could have your gold store at those places. You do pay a fee for that. It's around, depends how big size of your portfolio. It's about 0.75 to 1% a year, right? Which is not a whole lot considering the security you get and the peace of mind you get for holding the gold, right? They majority of them use Branks, which is armor facility, and they have armed guards and everything to protect it. It's very unlikely somebody can break into it, uh, right? In real life, anyways, maybe in the movies they can. So yeah, that is. the best scenario to store stuff, and you want to have some in Canada. If you're American, you can have some in US, some in Canada. You could put it in Switzerland as well. But the place like to put mines in Asia because that's the most stable right now. Governments is in Asia. Singapore is a really, really good choice. Hong Kong also pretty good, and those are tax-free jurisdictions, right? So if say shit hits the fan and you decide to move, you can move to places like those and you can cash out your gold tax free. Right. That's the way I want to work it out. So yeah, you don't want to put all of it in one place. If you have a big portfolio, you want to diversify it out and you want to also diversify between gold and silver. Now, for gold and silver, there is a special technique that I teach to you to trade gold and silver. It's all about the ratio. And if you want to learn about that, you can join our Discord to get access to some of that information. But yeah, there's a certain time that you want to be more focused on gold, and there's certain time that you want to be more focused on silver. And right now, I'm more focused on silver than I am on gold. And once the ratio is at the right place, then I'll start switching my silver into gold. And that's the proper strategy to trade if you want to get into the precious metals game. You can also educate yourself a little bit more. There's a lot of books out there, and there's a lot of good content out there. There's also a lot of bullshit out there. So, you have to, if you want to do it on your own, you're gonna have to filter out that information. It's really up to you. But anyway, yeah, for goal for me, I'm looking at that 5,000 as my target, and then I'm looking basically for 6,000 towards the end of the year on that target. And let's see if I go back onto a log chart. Let's see if I can measure out what possible s- extension this could be from this wave. Yeah, so 54, yeah. 6,000, 54, 7,000, 8,000. Doesn't go any further than that. But yeah, just by measuring like the distance from here to here, we still got ways to run. Um, and if this is a super cycle, I can expect this to go as far as 20,000 or so. So it's looking at around 15, maybe around 15 as a potential first target. And then they're like the way with gold is it doesn't go up in a straight line, obviously. It does look like it is right now, but they tend to go on very, very strong trends, and then they're gonna have a pretty strong corrective move, but it'll continue going higher. So gold tends to go in these super cycles that can last a decade, right? Like multi-year bull cycles. So we're just at the I would say we're somewhere between mid to late stage of this cycle now. And that's where the parabolic move comes. And when it does go parabolic, right, then that's the time where you really want to, if you want to take profits and invest in something else. But you have to look at to see, like for me, gold is something you can hold forever because it's basically an inflation hedge. So you can hold it forever. Wherever you can buy today with 1 ounce of gold, you can buy 100 years from now for the same 1 ounce of gold. It doesn't get depreciated. Usually, yeah, it doesn't get depreciated, so it holds its buying power throughout history. And it's something that you can hold forever and pass it down generation to generation if you really wanted to. So yeah, right now, look at this. It's another flag breakout. It's looking like a cup and handle. It's going to go for the next phase up now. Um, uh, each time I'm thinking, like right here, I'm thinking of pull back, maybe retest this area. It did not come, and then finally forms this flag and it broke out again. So I did load it up quite a bit right here for the breakout. I mean, it's not big percentage wise at this point. Um, I wish I bought more when it was low. That's all I can say, right? I do have a lot of people close to me that are gold bugs, been telling me about this big trade coming for years and years and years, but that was during this base right here. That was during the 10-year sideways action, and he was telling me this. So again, I mean, you could make a lot of money in gold, but I also made a lot of money in stocks in those 10 years too. So you kind of give or take, it kind of balance out. So that's why I like to trade because I'd rather be in it when the momentum is there and then I switch to something else when momentum dies, like I do with Bitcoin, right? Bitcoin momentum died down, I switched to precious metals because that's where the momentum was. So that kind of helps, keep boosting your returns over time. So, it's just a strategy that I like to use. But I mean, majority of people they don't trade, so they just buy and hold. If you're gonna buy and hold, then gold's one of the things they can buy and hold forever. So, let's go out look at silver. Silver. So silver's been artificially hold down for like years and years and years, because it's heavily shorted by people like JP Morgan and a lot of the other banks and hedge funds and shit. Mostly JP Morgan. JP Morgan, they basically hold the price down. They load up the silver themselves. Then what they do is they lend out the silver for other people to short. Now, the paper market, I think I look at some numbers saying that there's 500 times more paper silver than there is actual physical silver. So it worked great for all of this time, over 100 years. We did get that big spike in 2011 and also the 1980s, right? And now. But uh, the thing that's different today versus then is everybody's requesting physical delivery, right? So if they're short 500x of the physical demand, and then all of a sudden everybody wants physical, right? What are they gonna do? They don't have enough silver in the vaults. So all these Comex and London Exchange, they're running out of silver. So if there's more and more delivery requests and they got no silver, what are they gonna do? They're gonna go belly up, and a lot of people will go bankrupt. Those banks that are shorting. There was a memo. I read that somewhere on X that there was a memo that Morgan Stanley sent out to all their clients, telling them to get the fuck out of all their silver trades, long or short. So they must know something. I think they know that it's going to implode and it's going to be volatile. Um, because obviously, in China, physical silver trading at $128 US an ounce. Japan's $120 US an ounce. Venezuela's $110 US dollars an ounce. And silver trading in the US and Canada right now is at 80 US dollars an ounce. There's a big divergence there. They're trading at big, huge premiums in places like Australia, Asia, and stuff like that. And if you take a research, a lot of those dealers in those countries, they sold out as soon as they get supply. Like people line up blocks for gold and silver. That's how crazy it is over there. And we're not experiencing that in Canada and US yet. I'm thinking at some point it will. So if you want to get in it, get in now. Even at these high prices, just dollar cost averaging shit. Because if you don't get in now, you may not be able to get your hand on any of them. From experience, buying from the dealers, the dealers that I go through, I live in a very small province. So the dealers I went to, they all sold out, and I bought out a lot of their inventory, and I got them to send it to Montreal to store it at the LDS facilities, um, and send it off to some of them sent off to the banks in like Hong Kong, Singapore. So I diversified my way out. I'm buying all the silver, I'm sending them away, but uh you if you want to do that, you got to do that now, because there's not enough silver going around. And if all that run out and everybody's looking for silver, it's going to be super high premiums. Even if you find silver, it's going to be super high premiums. So right now it's not that bad. It's a good time to get in. It's not late. Even if it's high, just buy some and just keep buying as you go. I try to convince some people to do that. And some of them actually start doing that now, and they find it really fun to stack silver. So yeah. Obviously, you don't want to keep silver in your home. Well, you could keep a couple maybe, but like I wouldn't keep gold in your home. I would just keep it vaulted at a third party. Branks is probably the most well-known one that you can store it at. And most of your dealers they have relationships with a lot of these storage facilities, so they can hook you up with storage with some of these facilities. So and then all you have to do is when you buy them, you just get them to ship it off instead of taking them home, and then your gold and silver is 100% secured, right? Even you don't have assets to them. It takes a while to get physical delivery from them. As well, you can actually go and visit I think you have to book an appointment. You can visit the facility to see where your gold is being stored as well, I think. And you can request picking it up from them as well. I think they have a whole process doing stuff like that, a lot of paperwork. But anyway, if you want to get in, that's the way to do it. Now, if you want to do the paper market and you're okay with doing the paper market, the way to do it is obviously right now we're at a high point, so there is a risk of reversion. That means options are like long options are kind of at the end game here already. If you got in early, you would have made about 500% like I did on the option trades. But what you can do is you can sell options, collect premium, and if prices do come down, you can get a hold of the paper bullion. Now, if you want a little bit more leverage, the way to do is, like I said, gold miners, silver miners is the way to go. ETFs is a good way to go. So with ETFs, you want to do like GDX, which is the gold miners, GDXJ is the juniors, silver is SIL for silver ETF, SILJ is for the juniors. Um, and if you do your research, you know that a lot of people are saying it's going to be over 100 probably early this year, and then possible 150 to 200 within the next couple of years. It's trading at 80 right now, so there's still a lot of room to go. And I think the bigger returns will be in the miners itself because, like I said, their profit margins is going to be huge at these price levels, like huge, especially if energy prices stay down, right? Because that's their biggest expense is their energy costs. It's not nothing else. It's energy costs. So if energy cost stays down, they're going to have gigantic margins. Let's take a look at GDX. So this GDX is the monthly chart. It broke all-time highs. It's in parabolic stake. I'm looking for reversion coming. You see, I set my alert right there. I'm thinking it'll go a little bit higher and then it'll come down, retest this high before going any further. So, if you want to wait, you can wait for the reversion. But, the way I say it is going small anyways, because if it continues and it doesn't pull back, you ain't going to get another chance to get back in. So I would go in small, say you want to buy 1,000 shares. Now buy 100, right? Buy 100, sell one or two puts. That will put you at 300 shares. If you get a sign, if you don't get a sign, you collect the premium, right? Sell some further data out, like say sell some further data at 68. Sell another one or two, right? That will put you at 500 if you get a sign, right? That's 50% of your position, and you're collecting premiums on four positions, right? So if it continues to go up, it doesn't pull back, you collect the premium. It's fine. You made a little bit of money, and you continue going higher. You'll make money in the 10% that you bought, right? You could do 20% if you wanted to. It's really up to you. But yeah, I'll sell the puts, I'll collect my premium, and then I'll get my assignments if I do. And if it does come down to retest, say this between 60 and 70 zone, and it holds, I'll just buy the other 50% right there and then, right? And then work my way up. So that's one way to play it. See, let me take you down to some of the gold miner stuff here. So I'll show you GDXJ, GDXJ. So this is the junior miners. It's very similar chart, except for there's more torque on the junior miners. So we can see that it went from $30 at the start of last year, 2024, all the way to 121. It's a huge move. And if you got in the trade early enough, you would have made yourself a nice little fortune. Unfortunately, I did not. I got in around right here, mid-cycle. I got in. I still did really, really well on it. I was able to play one wave and then the next wave. So we're in the second wave right now. So I managed to play two big waves, which is still really, really good. But we all wish that we could buy at the bottoms right here. Anyway, so and you can also buy individual stocks as well. The ones I would focus on mostly on the big ones. So an Eagle is probably one of the best ones out there. Is a Canadian miner. It also trades on the US exchange. Very nice chart. $50 now at 190. 4x on a big miner like this. This is one of the biggest miners out there. I need 4x. That's how crazy it is. And this, the valuation of it right now is actually cheaper than it was when it was down here, right? Because gold has gone up significantly higher and their margins basically just multiply like crazy. If I take a look at their PE, so you can see that their earnings, right? Last year their earnings was only at it was below $1.40. They're expecting 280 in the next earnings report, and they beat in every single one in the last four quarters. So, everything's looking great for these miners. I am Gold, another one. Funny story. I know a guy that provides equipment like trucks and stuff for I am Gold for one of their mines, and he mentioned it to me. He said, "What do you think of this company? I just did a $500 million contract with them." I looked at the chart. I was like, "It's trading at $2." Because I used to trade this all the time. It used to hover around $10 all the time. Like it never goes below that. And then all of a sudden, last decade or so, it dropped down and went down to $2. And all of a sudden, he tells me that they're going in like with $500 million on a project. And when you know it, that was actually the start of the entire move, right? That was right here when he told me this. And then it gradually went up and just went parabolic. I mean, that's just right crazy. $2 to 18 at the highest, right? That's how crazy these are. So there's still, like I said, there's still a lot of room for these to go up. The best time to get in is whenever they pull back. I don't know if they will pull back because if their earnings keep expanding, it's very unlikely they'll pull back significantly. They might have very shallow pullbacks, and that might be your only chance getting in. So we'll see what happens. But I'm gonna go max 50% on the position size on these if I am going in, and then the other 50% I'll wait till the correct move or reversion to the mean, and then I'll go into 50% because it's very hard to go 100% in when it goes in parabolic state. So I mean, if you say you go in like 10 here, 10 here, 10 here, 10 here, 10 here. So your average price will be like around 9.95, and then all of a sudden it reverts back to 70. Well, I still got 50% of my money that I can buy at 70. And then that averages out to around the 80s, and then you start going back up to 110. You only made a crap load of money, right? That's why dollar cost works for like precision trading. This is called precision trading, meaning it's a long-term trade and you want to accumulate to full-size precision. That's what it's called precision trading. It's not, well, it's kind of like a longer term swing trade, basically what it is, right? It's very different from day trading. It was day trading, I will tell you how to do it completely differently, but this is for more of a longer term play. So, so you can see like these are some of the big names and they're all doing huge numbers. Like look at these charts. They're all doing huge numbers. And a lot of these smaller miners, like I remember this one, almost gold was like $2 at some point or $3 or something like that. And it just went nuts. Like these are all just going nuts. Same with the silver plays. I mean, These are silver names down here. So you look at silver juniors. So this silver junior went from like $10 to 30. Sil, which is the large ones, that one went from $20 to 90, like craziness. SLV is the silver bullion ETF itself. That also went from 20 to 70. So these are crazy, crazy. And this one went from like $2 up to 24. It's this one's the silver miner. A lot of the silver miners, silver is like a byproduct, so it's not like a pure silver play. A lot of them are like gold plays with silver as a byproduct, and silver is a byproduct with a lot of copper miners as well. So there's very few pure plays in silver. So the way to play this is really through an ETF or just pick your best companies that you want to go with that has silver on their balance sheet. So like Wheaton Precious Metals is a good one to go in. This is a kind of like a large cap for silver and gold play. Right. And PAAS is good. This is a former Yamada. I think Pan American Silver bought them out or something, and it went parabolic, right? So this Yamada Gold used to be one of my go-to plays for gold plays, but I haven't, like I said, I haven't traded gold in like over, I don't know, like a decade, maybe 2 decades. I remember trading a lot of it in my early days when I start trading, like when I started investing, I bought a lot of gold stocks. So these are just some of the names I trade. All the charts are same. They're all in parabolic states. And if you want to get into it, the best way, like for me, I think the ETFs is the way to go because if you don't understand the mining industry, like I have some knowledge of it. I'm not a lot. So the best way is just go with the ETFs. They filter out all the bad ones. So I just go with the ETFs. Or go with gold miners are a little bit off. I would go with the very large caps, like Newmont, Migo Eagle. I am go some mid tier, and this one's a mid tier as well. Franco Nevada is a good one. It's a royalty play. So, you can go this route, but I'm thinking just ETFs would be a good way to go. All right. Okay, so got that out of the way. So let's go check out some of the indexes to see what's doing. Dow Jones, all-time highs. So Dow Jones surprisingly is going higher than S&P in the past little bit. So that tells me a lot of people are looking for value versus tech. S&P in comparison because the S&P is 40% mags now, so it's a little bit different than before. IWM actually making all-time highs now. Maybe finally you'll break out because this looks like a giant cup and handle breakout now. So if there's money printing coming, if it's a risk on scenario, expect this to go up to like 300s, right? 350 maybe, 360, possible 400, right? Because this is the biggest lagger. So you can see that it's just been formed that cup and handle. We're finally in the expansion phase. So if this expanded all the way up, it's a monthly squeeze on. RSI is strong, everything's strong, momentum strong on the weekly, same thing. Strong momentum, finally breaking out. It's a nice chart as long as it holds above this breakout area right here. As long as it holds above here, it's fine. He's gonna go to the next phase, which is I'm watching this closely, but still I'm not big on the small caps as I used to. In 2020, small caps was the way to go, but here I'm just kind of cautiously watching. Maybe I'll trade it, maybe I won't. We'll see. Mags. All right, so going to daily chart. So you can see Meg's been struggling for a little while now, for months and months. It's just going sideways. Um, and some are performing better than others, but I find there's a lot of rotating going around, especially like I'll show the chart a little bit later, but A lot of people rotate from Apple into NVIDIA, mainly because if one's growing, like when all the high growth ones are going down, everybody switch to Apple, which is the value one, which is kind of funny because Apple's definitely not value anymore. It used to be value. They haven't grown in like I don't know how many years now. They haven't had any type of growth. So I don't know why people still buy it, but as a high-beta tech stock, I don't know why they would buy because there's no growth there. Anyway, mid caps, same thing. Mayo new all-time high, big giant V up. Looks a little bit dangerous because of the size of that V up. It's quite sharp up V up. So if he breaks out, he's gonna go parabolic. Usually before the market crashes, small caps, mid caps, they tend to go parabolic before that happens because that they're basically the only stocks that still have value because everything else, the large caps ran up to the valuation of small caps. So they just rotate to small caps and then when there's liquidity, they push it up. That's the risk trade. Usually Bitcoin goes up as well. And then once all the liquidity runs out, runs dry, everybody takes profits. That's the end game. So um NDX, tech stocks, like I said, it's mostly mag, so you can see that it's mostly going sideways. It is creating a bull flag right here. So if this does break out, there's a lot of room to go. You're looking at like 30 some thousand up here as targets. And that would be the parabolic phase, I think. And after that, I would most likely take profits. Do something like that. All right. RSP is the equal weight ETF. So you can see that equal weight is actually coming up, breaking higher than SPX. The reason why is because valuations of the megs are getting high, so it's rotating into more of the value areas. Like healthcare is actually doing really well, commodities is doing really well. So there is some rotation going on within the SP 500. That's why the equal weight's been going up sharply compared to XPX itself. So that there's still room for the market to continue to go higher because basically megs are overbought, and then capital flow is going to value, and then commodities, and then once everything's overbought, that's when the bubble bursts. Okay, so there still be time. It could be soon. It could be another few years, right? And it could be never as well because obviously in the last 20 years we haven't had a recession because they just keep printing more and more money. But that's coming towards an end because not a lot of people buying bonds anymore. And that's why they created the stable coin act to try to boost the bond buying. But if that doesn't work out, then basically their currency is going to die, and they can't print any more money because nobody's buying the debt, obviously. So that's usually when the currency dies, and then a revaluation of the currency. The East is going with gold and silver. The West is going with Bitcoin. So we'll see what happens. All right, so I say Apple. This is Apple is doing quite well compared to the other ones at this point. Amazon is just basing, so Apple right here. It's somewhat of a channel, actually more like a megaphone channel. I think they're all into megaphones right now because the index itself is in a megaphone. So megaphones are expanding, broadening channels. That means there's a lot more volatility. So when they start going up, they go up a lot. When they start coming down, it's going to come down very, very sharp. So we're in the upper range right here. It looks like it wants to break down, but we'll see what happens. We are oversold, so we might have a dead cat first. So if it does dead cat, I'm looking at something like this. If it doesn't make a new high, it's going to come down like this, all the way down here, and then maybe start bouncing. If not, it'll do like this and continue like hover around here before it rolls over like this. So one of the other. It is in up range, so it's not tradable for me. Um, Amazon is just going sideways, doing nothing. It's been a lot of chop. Um, Once it breaks above here, there might be another play. If it does break out here, there could be an extension to 300 or so. That would be the target. AVGL, I think this took over, knock, AVGL knocked somebody out of the top 10 list. I forget who it is. Might be Apple. Or no, might be Meta that it knocked out. But anyway, this is becoming a very large cap. So this is obviously Broadcom, chip maker, so semiconductors. Semiconductors like the new commodity now. It's very valuable. It does look like it's wanted to coming down now. So if you look at here, this is the broadening way to come down right here, right? So this is the way that it can expand higher, or if this breaks the neckline, it's coming right back down to reality, right? So we'll see what happens right here. Semiconductor space is in high demand, but also very high competition coming up. If China somehow succeeds in creating these more advanced chips, then these trades are all done, like all done, because they basically have a monopoly right now, and they're charging insane prices to meet the demand because obviously they're not producing enough. But if China ever makes similar, if not better, chips, they're gonna mass produce it to a point where it basically just kills every other stock because that's what they do. They just kind of just mass produce everything at a price that you just can't compete at. So if that ever happens, these stocks will sell significantly. So that's one thing you have to do if you're in semiconductor space. You have to pretty much keep up with all the tech news. Um, but so far, right now, they're a bit off. They're not because they don't have the ASML machines. They can't really make these type of chips. They have came up with some technology of what they're using, but the yields are really low. That means they can't mass produce. So basically, not going to affect these until that's mass producible. So until they create their own machines. So there's still a lot of time to play some of these semiconductor spaces, but you're looking at the peak of the semiconductor cycle because it's not really a matter if, it's just a matter when China will get to this point, and once they do, these plays are done. So um, Google. So Google's had a really strong recovery. They were a big lagger when it was right here. It was like in the megaphone, and then all of a sudden it broke upwards on the megaphone instead of downwards. I was thinking it was going to do this and come down, but it went the other way. And it's in parabolic state now. So it's pretty close to target because like if you draw that out, that looks to me like it's hitting for extension already. See, yeah, it's hitting for extension. It's beyond for extension, really. So let's see. Yeah, it's we're at the 1.618 now, so it's pretty close to that target. If you can't make break above here to go parabolic into here, it's likely it's gonna come back down. So, Meta, yeah, so Meta is not doing great. It's below 200 right now. It looks like it's test and fail so far. So if it tests and fails, it's going to come back here. This will be a neckline. It's going to dead cat, forms that right shoulder, and then maybe like this, and either come down or break back above right here once it creates that somewhat of a wedge or whatever. So yeah, keep a good watch on that. I'm thinking it'll probably go higher because it's around election. There'll be a lot of ad spend. But so far the chart it's broken down. So it's below 200. It's showing signs of breaking down. So see how that works out. If it does come down, as I say, you're looking at like this zone right here, basically. Your This zone right here, a support. So if it does come down, it's likely it's going to bounce off there if it does. If it doesn't bounce off there, it's going to be in a lot of trouble. All right, Microsoft. I mentioned this in a group. This was a double top right here. Just getting a little bit of a drawdowns just at 200 right here. If it breaks, you're looking at probably around this area right here as target support. If it breaks through it, then it's going to be hard to get back above it. But if it holds right here and holds, it's going likely continuation higher. So watch that area right here. That's basically your if you're still in the mags right here. But I'm not really in the mags. It's just that I find there's a lot more opportunities elsewhere because with these valuations, it's going to be very hard for a double. So I look for doubles. If they're at five, 3 trillion, $5 trillion valuations, it's going to cost $5 trillion for NVIDIA to double, and for like these ones, $3 trillion to double. So unless AI makes a big, big return for them, it's very unlikely they'll make a double anytime soon. All right. So NVIDIA, it's just doing this thing. It's holding this range. Um, you want to see a hold and break out. If it breaks below that range, it's going to get in a bit of trouble. It's going to probably form like head and shoulders, and then it's going to crash the market. I don't know if it will or not, but I don't think they will. I think it's more of a bullish scenario than that. Mainly because they have a monopoly right now and they're charging ridiculous prices where they have really, really fat margins. It's hard to short a company that has like a monopoly in a very high demand and in the sector, right? The AI sector. So I'm thinking if anything, it'll come down and then it'll bounce. It's going to create a higher low off that. Very likely. But we'll see. A lot of people say they're overvaluation. It's not really an overvaluation. They actually have the earnings to back up the valuation. So I think they're trading right now like only 30 or 20 PE. 20 some PE or 30 some PE. So it's not that high for the amount of growth that they're having. And it's very typical for that type of PE for this type of stock. So if you incorporate the growth on top of that, they're actually doing really good on the numbers. So it justified this valuation right now. So they're not expensive valuation wise, right? But if they lose the monopoly, then yeah, game over if they do, but I don't think they will. They're creating like a whole ecosystem. So even if say somebody makes the chips, they still own the ecosystem. It's almost like Apple, right? Apple is not really about their phones, it's about the ecosystem. So they're a first to market and they can create the ecosystem where a lot of the AI software runs on their ecosystem, and that's how they going to generate future revenues from that. So it's not all about the chips. So you have to really understand the company to really, but still, I mean, if China says China creates their own chips, then compete with NVIDIA, or if AMD creates a chip that competes with NVIDIA, and then Intel creates a chip competes with NVIDIA or Broadcom or whatever, it does hurt their margins, because they're charging at ridiculously high prices. That's the thing, right? Okay, Tesla, it's creating like this cup and handle is volatile. If this holds this right here, I would say 380, 400. If it holds right here, it's going to form a tight range, and then it's going to go. You need it to break 500 to go, right? If it goes, it can go, but it's really hard to predict on Tesla. So until he breaks the all-time highs, there's really nothing you can do until it breaks the all-time highs right here. It does looks like a continuation. But if this fails, say if this fails right here, it's going to come back into this trading range again. So just watch that very carefully to see if Ashley can hold and move forward. It does look like it wants to. So it's kind of like an upward channel right here. So you want to go, and then it breaks the all-time highs, then it really goes, right? So just keep watch on Tesla to see how it goes. I don't think I traded the megs for a few months now. It's mostly because they're, like I said, we just gone through all of them, and they're all kind of just in that range where there's not a lot you can do up here, right? If you're invested, then you maybe just manage to trade, but if you're not invested, it's not really an area where I would go in. There's a lot of different opportunities out there that I can do. So, um, if you guys want to do miners. So miners were disappointing last year. I wish I took profits earlier, or choke more off, but I kind of held on to a lot of this stuff. I did lock in like majority profits and then I kind of roll up, like I normally do. So I didn't really lose money. I still made pretty significant returns on the miners, but I was not expecting this type of version. I was expecting a higher low and then breakout for year end because usually October, November, December it just goes nuts. And so I was pretty heavily invested for that leg, but it because it didn't really confirm the breakout of the previous high, I did not like went like heavy on it. I went light. I went locked it in and then I went light. So I did like gave back some gains, but I mean that's just part of the game. So the one I would be focusing on, HUD has been very strong. It's going to go for the all-time highs right here. Cypher is another one. So the reason HUD is because of the data centers. They're converting to data centers. Cypher is another one that converts into data center. That's why it's gone parabolic as well. Irene is the one that went into data centers. It went parabolic, went $2 into fucking $80. And then you got these are the traditional miners and they're struggling, right? Still, Riot still in the base. Um, Wolf is another one that turned to data centers and they're holding well. Mara did not, so it's lagging. So Mara's heavily manipulated, obviously, because I think they're the eighth biggest Bitcoin holder. So anybody that's a treasury company right now is a target because obviously BlackRock wants all the financial institutions, if they go into the digital game, they want everybody's Bitcoin. So they kind of just pushing everybody down so they can accumulate shares of it. So they basically have a share of their Bitcoin and whatever. So that's the what I'm thinking of doing. It's basically they offload on silver, then now they're suppressing Bitcoin. I think that might be a play, but we'll see. That's just speculation, not real. But they're artificially held down. They're heavily shorted, mostly because they're holding so much Bitcoin. They want to force them to sell their Bitcoin. So similar with MSTR, same thing. It's the same game. They're suppressing MSTR to push them as far down as possible to try to see if they'll have to sell their Bitcoin because they obviously hold the most Bitcoin out there. So. Anyway, I think I'm gonna end the video here. Like I said, like for this year, the theme is precious metals and commodities. Speaking of commodities, I probably should show you the chart for the sectors for energy and copper. So let's see. You'll go find copper in here. I got CopX right here. Oh, these are copper miners. So you can see that copper miners are also going in parabolic state. Same thing as gold. So copper was not far behind from silver. So like I said, it goes from gold to silver to copper, right? So copper is doing really well. They're trading at all-time highs now. On the commodity itself. So the copper miners are just making a significant amount of money. So that's why it's going parabolic as well. Energy is the only lagger left. So energy is going sideways for the past how many years now? Um, well, yeah, since post-COVID, yeah, 2022. It's just been going sideways. I think that's because Trump wants cheap oil, so they just keep drilling, drill baby drill, right? So they're kind of suppressing the oil price to be around this range so that so that it's cheaper for companies to operate, and they're just keeping in this range. But at some point, it's going to catch up, and then it's going to break out. And once it breaks out, let's go into a monthly chart here. Once it breaks out, it's going to run because you can see right here, it's been sideways for a long time. It's just been up, down, up, down, up, down, up, down. Now it's just basing right here, right? So if there's a currency debasement, oil prices will go up just as everything else, it'll go up. All the metals will go up, energy will go up, commodities go up, agricultural products will go up, like potash and stuff like that, they'll go up as well. So I'm just watching this really, really closely. I probably should set that alert at, let's say, I'm on alert for some reason. Um, yeah, there you go. Set an alert up here because once energy breaks out, it's going to run. So this is the only lagger left in the commodity space. So watch this closely. This could be a play. Also, oil services is starting to pick up as well, and that's usually a good sign. I think that's OIH. Oil services, yeah, oil services. So oil services has started to rally a little bit, picking up. It's back above the EMA. You're looking for this to break back above the base. Once you break back above the base, it's going to start going as well. So that's also a space that I look at. Uranium got away from me. I've been waiting for a pull back and then come back, so it just kept going. So uranium is also a really good space to be in because mostly the next phase of the economy is based off AI. So anything that's in regards of energy, electricity, infrastructure, and stuff like that is all gonna go up. So uranium is the only sustainable clean energy. So it's in high demand right now, especially in China. They're building like tons and tons of nuclear power facilities. It's just a matter of time before the U.S. start doing that as well, because it's the only sustainable energy. So uranium might be a huge play. Chemical is a Canadian company. It is the biggest uranium producer, so they'll be the ones to watch. If it comes back a little bit, it's a bit expensive, but I mean, if it comes back a bit to around, say 70-ish, 60, 70-ish, might be viable. I missed a trade, so I don't know if I'm gonna go back into it. I usually trade this back in early 2010s. I missed an significant amount of money on it, and then the space did nothing for the last 15 years until now. So yeah, a lot of these commodities trades they go in cycles, so they're going back. This is more specialized commodity, so but I think we're at a point where we need more nuclear energy, so these could start going parabolic at some point, right? Anyway, that's it. So just to review, 2026, I expect some chop. I expect a correction of some sort. I expect a rally towards the end of the year for midterms. I think we're still going to be bullish. I forgot to give you my SPX target. So my low end target on SPX around 72, 7,300. My high end would be around 8,000. So somewhere in between could happen. It really depends. There's a lot of things, moving parts and geopolitics and all that stuff. So that does affect it. But I would just take it as it goes along. One key point to look at is the trend itself. So we talked about the trend. As long as we're in the trend, you're fine. Once that trend breaks, that's when you start worrying. But we're in trend is fine. And then once the trend within the trend start breaking, then there will be a correction. So I'm talking about this trend right here. So if this trend breaks, we go into a correction mode, but we'll still be part of the upper big trend, right? So we're going to get into a correction. We'll maybe do a continuation. But if this trend start breaking on the big one, if we break the big trend, that's the end. That's a recession coming. All right. So you just pay attention to that. I don't think will happen this year, maybe next year, but we'll see. If not, the cycle tends to go in 4 or 5 year cycles. So if it doesn't happen like next year, it might get dragged down to like 2030 to 2032. around that time frame. So that could be the time frame. And if that's the case, if gold hits like 6,000, 7,000, 10,000, I'm pretty sure that S&P is going to start rolling over quite hard because that's the only reason why gold would go up that high. So anyway, that's it for this year. If you guys want to join me, get real-time updates, get what I'm trading, where I'm rotating my money into, join us in Discord. You can sign up at leecapitaltrading.com. I also got a free Facebook group. You can look us up. Link in description. Make sure you like, subscribe, and hit the bell icon. I do occasional updates throughout the year. At some point, I may start doing this on a regular basis again, like before. Like I mentioned before, I have two very young kids now, so I don't have the time. But at some point, I may start doing it again. So just like, subscribe, and then I'll see you when I see you.